Welcome to episode 181 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at how to use moving averages in our Forex trading. Moving averages are good because they help us identify the trend and they will also help us get into a trending move. So let's go on to the charts and we'll take a look at how to use moving averages in our trading. Here we're looking at how to use moving averages, especially for trend trading. Moving averages are really good to use with price action because they help us identify the trend and they help us stay with the trend. So especially if you are a newer trader and you're having trouble finding the trend, you can take a look at moving averages. Now do keep in mind moving averages are lagging indicators, so you would get an entry that would be a little bit later than what the price action will give you. So let's take a look at the moving averages here. There are many different moving averages that you could use. The ones that I have here are 50 and 100. You can also use 50 and 13 crossover. So in this one, I'm using 50 and 100. I like both of those, 50, 100 or 50, 13. And you can play around with it and choose which one you prefer more. So in this case, what we're looking for here is the crossover of the two. So our 50 moving average is the blue one here, and the 100 moving average is the white one. So what we're looking for is a crossover of the two. So when a faster moving average crosses over the slower moving average to the downside, that means the trend is now to the downside and we're looking for price to drop. So in this case here, we see that we have a bearish candle close on our daily pivot here, and then we get a nice big candle close here. Once this candle closes here, our moving averages will cross over. So from price action perspective, you could have gotten an entry here, but because we're using moving averages, our entry will be a little bit delayed because they are lagging. So once we get our close here, we look for a bit of a pullback because that's a large candle. If we look for a pullback, we can get a better entry. So wait for a bit of a pullback and enter the trade short. Our stop loss would go above the previous high. We just want to make sure we give trade some room to breathe in case price goes and tests the level once again. So here we enter the trade short, and as you can see, we stay with the trade for as long as our moving averages are moving lower and they're not coming closer here. So in this case, this indicates that a trend is continuing to the downside here. As the moving averages open up more, it shows that a trend is growing now, it's expanding. So we stay with the trade for as long as it continues lower. And now we see that moving averages haven't crossed over to the other side. To exit, you can either wait for the moving average crossover to the other side, so 50 would cross over 100 in the opposite direction, or you can just look for price to close on the other side of your 50 moving average. So in the second option, when you just wait for price to cross over to the other side and close on the other side, in that case you would get a better exit point. But if you wait all the way for them to cross over again in the opposite direction, then you would give back a few pips. Now there are advantages and disadvantages of doing both, but the easiest one is to just wait for price to close on the other side and then exit the trade. So from entry to exit here, we get 380 pips in the trade. So moving averages are a great way to identify the trend and then stay with the trend for as long as possible. Here we look for moving averages crossover. We are looking for 50 to cross over 100 to the downside here, which shows us that price is going to move lower. So our entry would be after the crossover here, which will be after this candle closes here. We look for a bit of a pullback to get better entry. Our stop goes above the previous high here, and then we stay with the trade for as long as our moving averages are our opening here, and once we see that price closes on the other side of the blue moving average, our smaller moving average, which is 50 in this case, we can exit the trade. So in this particular instance, it hasn't closed yet, but once it closes above the blue, that's a good place to exit the trade. From entry to exit, we get 380 pips in the trade, or $3,800 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course. Thank you so much for joining me today. I hope you liked this episode. If you enjoyed this video, please feel free to subscribe to the channel and share it with your friends. I'll be back with another great trade setup next time.